Welcome to After Hours Action. I'm Greg Greenberg from the Street. Major U.S. markets traded higher Friday, building on Thursday's gains that saw the Dow Jones Industrial Average close above 16,000 for the first time, and the S&P 500 break a three-day losing streak. Let's wrap up the market for the week. The Dow was up 55 points to 16,065, while the S&P added 9 points to close at 1805. The Nas gained 22 to finish the week at 39.92. In corporate news, PetSmart posted earnings of 88 cents a share, beating estimates by 2 cents. Didn't help the stock, though, which fell 1.5%. Foot Locker, on the other hand, or Foot, finished up 4% after it beat Street consensus by 2 cents. Meanwhile, two tech companies climbed on earnings. Splunk reported a loss but beat Street sales expectations. That stock jumped 23%. And Marvell Technology crushed third quarter estimates by 7 cents, also beat on the top line. That stock closed up 5% today. Now, next week will be a slow one on Wall Street due to the Thanksgiving holiday, but overseas markets will be open. So instead of fighting the crowds at the mall, maybe it's a good time to buy a few foreign stocks. I spoke with Wells Fargo fund manager Anthony Cragg today, and he says there are plenty of doorbuster deals right now in Chinese stocks. Anthony Cragg, emerging market stocks got hit this week when the Fed released their minutes from the October meeting. There's always that worry about tapering, which hits emerging market stocks. So why should investors want to be in them now?
Well, I think the initial knee-jerk reaction to tapering was negative, but I think first of all some of that's now priced in. Secondly, I think when tapering really starts in anger, as it were, it's probably because of a pickup in economic activity in the US and even in Europe. You know, the OECD is forecasting a pickup in global growth next year. Those things are actually good for emerging markets. So I think balancing the concern of tapering will be more positivity on improving global growth. And don't forget, we've had an almost 25% underperformance of developed markets versus, emerging markets versus developed markets.
Well, another concern about U.S. investors about Chinese stocks, and you are bullish on Chinese stocks, is the fact that there's very poor governance over there. And we've seen this come to light with Muddy Waters, who's AKA Carson Block, or perhaps that's the reverse, Carson Block, AKA Muddy Waters, when he unearthed problems at Sino-Forest, for example. Has the governance gotten better?
Yeah, I think ESG, environmental social governance is a big theme of ours, and we're trying to apply it right across not just China, but all emerging markets. I think it's increasingly important to try and identify trustworthy managements. I think, some of the egregious examples we've seen, like Sino-Forest, to some extent, I think the short sellers have targeted the low-hanging fruit. So the early ones they targeted, they're proved to be fire behind the smoke, as it were. The more recent ones have tended to bounce back in most cases. So I think now there are less obvious bad apples to be identified.
So which apples do you like? What are your favorite Chinese stocks?
We like broadly what I would call new China themes. So internet related, of course, e-commerce in particular. We're also very big on the environmental themes, environmental protection, clean energy, solar, water purification, all of that sort of thing. If you go to Beijing, I'm sure you know that the air is pretty bad. But I think the size of the problem, the pollution problem in China, equals the size of the opportunity, which is huge.
That said, you may be bullish on China, but you're less positive or constructive on Brazil. And I always thought that as China goes, so goes Brazil. So if China's going well, why won't Brazil go well?
Not necessarily, because don't forget, Brazil is fundamentally an oil, gas, iron ore, metals economy. These are really the things that still primarily drive Brazil. That super cycle, as it's called in the commodities, has tapered off a bit. That is actually good for China. China is basically an importer of many of those things. So I think we will see increasing differentiation between the BRICS, as they're called. There's no real reason why, on the one hand, let's say India and Brazil should perform at the same speed as China and Russia, let's say.
All right, thanks a lot, Anthony.
Thank you.
Our thanks again to Anthony Cragg from Wells Fargo, and thank you for watching After Hours Action. For The Street, I'm Greg Greenberg.